Welcome to TalkTickers. Today we're diving straight into the latest from Rocket Lab. Their first quarter earnings call for 2025 just happened.
That's right. We've pulled up the key details for you, looking at performance and, what's coming next.
Okay, so let's start high level. What are the headlines?
Well, pretty strong start to the year. They reported near record quarterly revenue, $122.6 million.
Wow, okay.
Yeah, and that's up 32% compared to last year. Hit the top end of their guidance too, so good execution.
And looking ahead, more growth.
Seems like it. They're guiding for another record quarter in Q2, somewhere between $130 and $140 million.
Okay, and launch demand. Still looking strong.
Definitely. Booked 8 new Electron and HASTE missions just in Q1. Plus, they had 5 successful launches already. Busy quarter.
And the really big news, maybe, was getting selected for the DoD's NSSL program.
Absolutely. That's a huge one.
Why is that so significant? Can you unpack that a bit?
Sure. So the National Security Space Launch Program, NSSL, it's how the Department of Defense ensures they have reliable ways to get critical stuff into space, national security payloads.
Right, the important missions.
Exactly. So being picked for that, it basically validates Rocket Lab's tech for these really demanding government jobs. And it opens up a pipeline for potentially big revenue down the line.
A strong endorsement then.
A very strong endorsement. And we also saw good things from their space system side, too. They got an in-space manufacturing mission back successfully, launched another spacecraft. Things are moving there.
Got it. Let's talk financials then. Gross margins looked pretty healthy, exceeded expectations.
They did, yeah. Q1 GAAP gross margin was 28.8%, and the non-GAAP number was 33.4%.
Okay, can you remind us quickly GAAP versus non-GAAP margin?
Sure. So GAAP includes all the standard accounting costs. Non-GAAP often backs out things like stock-based compensation or, one-off items, gives you maybe a clearer view of the underlying operational profitability.
And both beat their forecasts.
Both did, which suggests, they're managing costs well in the core business. And their backlog, that's another strong point. It's up to $1.067 billion.
$1 billion?
Yeah. And the launch part of that backlog almost doubled year over year. So good visibility into future work.
Okay, but I also saw mentions of negative cash flow.
Yeah.
Operating and free cash flow are both down. What's driving that? Should we be concerned?
Right. Good point. So the GAAP operating cash flow was negative $54.2 million and non-GAAP free cash flow negative $82.9 million. It's mainly down to two things.
Right.
First, the timing of payments, especially on some big space systems deals. They call it lumpy cash receipts, meaning payments don't always line up neatly quarter to quarter.
Oh, okay. Makes sense.
And second, the really big one, ongoing heavy investment in developing Neutron, their next-gen rocket.
So strategic spending rather than operational problems.
Largely, yes. It's investment for future growth. Negative cash flow isn't ideal, obviously, but in this context, it's understandable. And their cash position is still solid. They ended Q1 with $517 million in cash and marketable securities.
Helped by that equity offering they did.
Exactly. Gives them a buffer for these big investments. And their adjusted EBITDA loss, $30 million, was actually better than they guided for.
Okay. And looking ahead to Q2 financially, what are they expecting?
Further improvement on gross margins. GAAP projected between 30% and 32%, non-GAAP 34% to 36%.
Margins taking up.
Right. But they do expect that negative free cash flow to stay, elevated. Still investing heavily in Neutron. They're guiding for negative $40 million to $80 million on non-GAAP free cash flow for Q2.
Okay, makes sense with Neutron development still in full swing. Let's dig into the segments now. Launch first. Electron's still a workhorse.
Absolutely. Electron is really leading the small launch market. They're showing they can launch frequently and reliably. 5 launches in just 6.5 weeks in Q1.
That's quite a pace.
It is. And they've got 6 more planned back to back. Then there's HASTE, their hypersonic test vehicle program. That's really picking up steam.
Oh, yeah. What's happening there?
Got contracts from the U.S. Air Force for something called the EWACI program, another from the UK Ministry of Defense, plus more work on the DoD's MATB program. They're up to 7 HASTE missions booked just for that program now.
So real traction in hypersonics testing.
Significant traction, yeah. And then, of course, there's Neutron.
The big one. How's that progressing?
Yeah.
Any key milestones?
Development seems on track. The NSSL on-ramp we mentioned earlier is huge. They're actually the only publicly traded company ever onboarded like this.
That's quite a stat.
It is. And once Neutron flies its first mission, they'll be eligible to bid for task orders under that big Phase 3 Lane 1 NSSL program. That's worth up to $5.6 billion.
Potentially very lucrative.
Very. They also snagged a contract with the Air Force Research Lab. This one's interesting. It's for point-to-point cargo delivery using a Neutron that returns to Earth, targeted for 2026 or later.
Wow, future stuff. What about the hardware?
Making progress. They finished the qualification campaign for the second stage. That's now in final assembly, getting ready for shipment. The first stage upper module is nearly done. The launch pad, Launch Complex 3 in Virginia, is on schedule.
And the Archimedes engines?
Testing is going well. They're using flight avionics and software now. And crucially, they have a second test cell operational. That speeds things up.
So the first launch target, still second half of this year.
That's still the target, yes. Second half of 2025.
Okay. Now you mentioned launch margins were a bit lower in Q1. Why was that, and what's the outlook?
Right. It was mainly fixed overhead costs spread over slightly fewer launches compared to, say, later in the year, and also a lower average selling price, or ASP, per launch in Q1.
But they expect that to improve.
Significantly, yes, especially in the second half of the year. They expect higher launch cadence and higher ASPs as they fly more complex, higher value missions. That should really boost margins.
Got it. Okay, let's switch gears then. Space systems. The big news there was the plan to acquire Monaric.
That's right. Monaric is a German company. They specialize in laser-based satellite communications, optical inter-satellite links.
Why is Rocket Lab interested in that?
It's strategic. It gives them key technology for inter-satellite links, which is really important if you're building big constellations where satellites need to talk to each other.
Right, like Starlink or Kuiper.
Exactly. And it also gives them a proper foothold in Europe, access to European government programs, broader market opportunities there.
So tech acquisition and geographic expansion. Is the deal done?
It's progressing through approvals right now.
Yeah.
Not finalized yet, but moving forward.
Okay. What else is happening in space systems?
Well, their ongoing VA missions are moving along. The third in-space manufacturing capsule should be returning to Earth pretty soon. They're also building the fourth and final Pioneer spacecraft for the Nevada contract. That's happening in Long Beach.
They're releasing new products too, right?
Yep.
New modular solar arrays called Starray lets customers customize power for their satellites, expanded compatibility for their Frontier satellite radio, and new Max software packages for satellite guidance and control, so pushing innovation across the board.
Sounds like they want to be a one-stop shop for satellite builders.
That seems to be the goal. They're actively chasing big government and commercial contracts to build entire satellite constellations. And they mentioned having about half a dozen potential M&A deals in the pipeline to keep integrating vertically.
Interesting. Lots of moving parts. And there was something about a new company structure.
Yeah, a corporate restructuring.
Right.
Rocket Lab Corporation will become the new public parent company, replacing Rocket Lab USA Inc. Should happen by the end of the month.
Any impact on shareholders or the ticker?
No, they were clear about that. No impact on shareholders or the RKLB ticker. It's more about streamlining things internally, especially for handling U.S. government classified work as they grow.
Okay. And how is Space Systems doing financially? Revenue and margins? Doing well. Generated $87 million in revenue in Q1. Margins were strong, and they expect that to continue, maybe even improve slightly.
Is the backlog steady there, or does it jump around?
It can be a bit lumpy just because the contracts can be quite large, but they say the pipeline of opportunities is healthy, including those potential large constellation deals.
You mentioned the Starray solar arrays. What's the focus there?
Quick turn opportunities and modularity. They want to be able to provide customized arrays fast, positioning themselves as a complete array manufacturer.
And the European expansion via Monaric, that's mainly about accessing government programs.
That's a big part of it, yeah. Getting access to protected government programs in Europe, but also just broader market access for all their products over there.
And the strong space systems margin in Q1, is that a good baseline going forward?
They indicate it's a pretty good run rate, yes. They attribute the strength to increased scale in that part of the business, though they expect even more significant margin expansion over time in the launch segment as cadence ramps up and Neutron comes online.
Okay. And any potential issues with Monaric, like supply chain problems from before the acquisition?
They acknowledged Monaric had some supply chain issues linked to its previous financial situation, but they expect to resolve those under Rocket Lab ownership.
One more thing on launch Electron reusability. Is that still happening?
They've paused it for now. All hands on deck for Neutron development is the message. Makes sense. Neutron is the big priority.
Right. And they mentioned interest in their Flatellite spacecraft. What's that?
Yeah, the Flatellite is their spacecraft bus designed specifically for high-volume manufacturing and rapid deployment. Think large constellations. They're seeing strong interest from both commercial and government customers planning those kinds of deployments.
Gotcha. And just to circle back on NSSL, when can Neutron actually start bidding for those task orders?
After the first successful flight, once it's proven, they can bid, and those Phase 3 task orders run all the way through 2029.
Okay. And finally, Electron ASPs they expected to rise.
Yes, they expect higher average selling prices for Electron throughout 2025. They mentioned hitting a high water mark in Q4, which should help them hit those overall margin targets.
Okay, quite a lot to digest there. So, stepping back, what are the key takeaways for investors from this call?
Well, first, the strong revenue growth and the positive guidance definitely signal continued momentum. The space economy seems healthy, and Rocket Lab is executing well.
The NSSL entry feels like a big one.
Huge validation, as we said, opens the door to significant national security launch revenue. Third, their vertical integration strategy, like a Monaric deal, aims to make their supply chain stronger and give them a competitive edge.
And the focus on Neutron.
Absolutely critical. That's their ticket to the much larger medium lift market, big revenue growth potential, and eventually reusability benefits. Plus, their space systems business is becoming a really significant growth driver in its own right, especially if they land some of those large constellation contracts.
The restructuring makes sense for managing growth, especially with government work.
Right. And finally, while that negative free cash flow needs watching, it seems primarily driven by strategic investment in Neutron. That should hopefully ease up once Neutron is flying commercially.
Okay, that's a great summary. Now, for our favorite speculative segment, this is not financial advice. Based on everything we've heard, what's an outrageous but plausible trade idea?
All right, let's think. We've got Rocket Lab pushing hard on Launch Electron, HASTE for hypersonics, Neutron coming soon. They won the NSSL spot, they're building satellites. Demand seems high across the board.
Yeah, lots of activity.
So here's an idea. With HASTE winning defense contracts for hypersonic testing and the Air Force looking at Neutron for rapid point-to-point cargo, think about what enables those things.
Okay, materials, engines.
Exactly. Particularly materials. Think high-temperature composites, advanced alloys, stuff that can handle the extreme conditions of hypersonic flight and reusable rocket stages like Neutron.
So not Rocket Lab directly, but their suppliers.
Potentially. It's a way to get broader exposure. While Rocket Lab is obviously a direct play, investing in the specialized materials science companies that supply everyone in advanced aerospace and defense could be a way to leverage this trend more broadly.
So a long position in advanced materials companies.
It's definitely speculative. A play on the key enabling technologies needed for the next generation of flight, both in space and the atmosphere, betting that the demand for these high-performance materials will grow significantly across multiple players.
Interesting. An upstream play on the future of aerospace. Outrageous, but plausible.
That's the idea.
All right, that certainly gives you something to mull over. And that wraps up our deep dive into Rocket Lab's first quarter 2025 earnings. We covered revenue, NSSL, Neutron progress, space systems growth, the Monaric acquisition. A lot happened.
Definitely a busy quarter and a lot to watch going forward.
Absolutely. Remember, as always, this analysis is just for informational purposes. It is definitely not financial advice. Thanks for joining us, and we'll catch you next time as we unpack another set of crucial insights.